In September, we were told that India is anti-AI, so India is likely to India's underperformance was because India did not have AI, and then the last week we have said that India is the reverse AI, like because AI is now into a bubble, India might actually benefit by not having AI play. So the market sentiment will keep shifting based on themes and thematics, and people keep playing that over a period of time. What I would say is that if you, and I've said this in a show before, that almost 75-80% of the flows that comes into Indian equity markets are not India dedicated flows. They come from global or global emerging market or Asia mandated flows, and India is a weight in that. So historically, India has had a overweight in many of these indices, and India has rightfully done so much better than the emerging market indices. In the last year or two, we have seen a underperformance. India has underperformed rightly because of valuations not being too stretched, earnings growth support not being there, and India underperformed in the last year. Maybe what about 25-30% underperformance against the MSCI EM. And what we see now in the global portfolios is that India is kind of underweight in global portfolios, and India's relative valuation, especially on the large caps, seems to be on par with its own history, or maybe lower than its own history. Those things tell me that as the momentum changes and if the earnings growth expectation comes up, you should see some reversal of the outflows that we have seen. Or maybe the outflows might not be as strong as you've seen in the last year. It's about $30 billion of foreign portfolio outflows. Maybe that has stalled. And if the momentum comes back, or if the AI trade fails out in China and Korea and Taiwan, then I think India will get allocation. So you will get those global allocations. We still don't see very high appetite for India dedicated flows. Last year's underperformance is a reason for them saying that, this is the reason why we don't want to do a country mandate.